$1.2 trillion in private family wealth sits on unpaid tax extensions at this very moment. Most Americans fear the April tax deadline, but here is the hidden truth about why the world's most successful investors never file in April. This strategic delay is not a sign of laziness. It is a calculated move to maximize investment liquidity. Mastering this specific calendar manipulation remains the most overlooked secret. Imagine the scene. It's 11:59 p.m. on April 15th. Post offices have lines around the block. Tax software servers are crashing under the load, and the stress of a potential 5% per month failure to file penalty hangs over the public like a heavy cloud. For most, this date is a rigid financial cliff. But for those sitting on the boards of S corporations or managing private equity funds, today is just another Tuesday. They haven't filed their 1040S, and they won't for another 6 months. By simply filing IRS Form 4868, they have secured an automatic extension until October 15th, 2026. This isn't dodging taxes. It is a calculated maneuver to maintain accuracy in a world where late-arriving financial data is the norm. We have been conditioned to believe that filing early is a sign of civic virtue or financial health, much like how Milton Friedman might analyze the psychological barriers of the taxpayer's conscience. However, in our modern, hyper-complex economy, filing too soon is often a tactical error. It leads directly into the amended return trap, the dreaded 1040X filing that many veteran CPAs believe draws the unwanted attention of IRS Commissioner Danny Werfel's enforcement teams. The wealthy do not want to do the work twice. They want to file once, perfectly, when every corrected 1099 and Schedule K-1 has finally landed. While they must still navigate the safe harbor rule by paying 110% of their 2024 tax liability by April to avoid interest charges, currently sitting at a steep 7% for the start of 2026, the return itself, for the elite, speed is the ultimate enemy of precision. By reframing the deadline as a filing window rather than a closing gate, the rich leverage time to their advantage, turning a bureaucratic requirement into while the average employee receives their W-2 by late January, the world's elite are trapped in a structural gridlock known as the information lag. To understand why, you have to look at how wealth is actually structured. It isn't a single paycheck. It is a sprawling delta of partnerships, S corporations, and private equity funds. These entities do not use W-2s. Instead, they report income via Schedule K-1, a document that maps out an investor's share of a business's profits and losses. Here is the architectural trap. These K-1s almost never arrive by April. Under the current IRS framework overseen by Commissioner Danny Werfel, many of these business entities have. If you are a limited partner in a fund that holds stakes in 30 different sub-companies, your tax preparer is essentially waiting for a 30-car pileup to clear. Each of those sub-companies must finish their books before the main fund can finish theirs, and only then can you receive your specific numbers. This creates a brutal domino effect. If a private equity firm is waiting on a corrected 1099-B from a broker, if they cannot issue their K-1, the high net worth investor cannot legally tell the IRS what they earned. To file in April under these circumstances would be to guess, and in the world of high finance, a guess is a red flag for an audit. Firms like Crescent Capital and Baker Tilly advise their clients that accuracy is the only true defense against the IRS. As of the 2025 tax year, the sheer density of global investment means that for many, the real tax season doesn't even begin until late summer. By utilizing Form 4868 to secure a 6-month extension, The wealthy aren't just delaying the inevitable, they are ensuring that when they finally submit their 1040 in October, the data is verified and unassailable. It is the tactical choice of a high-resolution photograph, but the most shocking. To understand why the strategic delay of a tax extension is a weapon of the elite, we have to look back at the moments when the American financial system shifted its tectonic plates. This isn't a new trick. It is a legacy of the 1920s boom and the subsequent. In the Roaring Twenties, Secretary of the Treasury Andrew Mellon, one of the wealthiest men in the world, oversaw a period where the top marginal tax rate plummeted from 73 as the stock market surged and the first true multinational conglomerates formed. The sheer volume of data moved. HNWIs of the era realized that precision was more profitable than speed. Friedrich Hayek later argued that the biggest problem in an economy is the utilization of knowledge which is not given to anyone in its totality. The wealthy internalized this. They knew that rushing a filing led to catastrophic errors. Then came August 15, 1971. President Richard Nixon ended the direct convertibility of the U.S. dollar to gold, effectively birthing our modern fiat system and ushering in an era of rampant inflation. By 1974, inflation was screaming at over 11%. For a savvy investor, the math was simple. If you owe the government $100,000 in April, but you can delay that payment legally until October while inflation erodes the value of the currency, if your capital is deployed in an asset returning 15%, while the IRS underpayment rate is lower, you are effectively using the IRS as a low-interest lender to leverage your own wealth. This period taught the American aristocracy that time has a literal price tag. Just as Milton Friedman famously noted that inflation is always and everywhere a monetary phenomenon, the wealthy discovered that a tax extension is always and everywhere a liquidity phenomenon. They weren't just avoiding a chore, they were conducting a sophisticated interest rate arbitrage that the average W-2 employee, with their taxes withheld at every paycheck, could never access. This historical precedent transformed the October filing deadline from a fallback for the unorganized into a sophisticated tactical maneuver for those who understood that in the world of high finance, the person who holds the cash. As we enter the 2026 filing season, the playbook has shifted from simple procrastination to a sophisticated tactical defense of one's balance sheet. The immediate catalyst for this change is the One Big Beautiful Bill Act, signed into law in July 2025. This legislation fundamentally altered the math for millions by permanently extending several key tax cuts and, most importantly, lifting the cap on state and local tax or SALT deductions. For the high net worth individual, these new variables turn the traditional April deadline into a high-stakes guessing game where moving too far. Why rush a complex calculation? Consider the cost of capital in this current economic environment. In the first quarter of 2026, the IRS underpayment interest rate stands at 7%, though it is scheduled to dip to 6% in the second quarter. While that appears punitive compared to historical lows, the wealthy view it as a manageable fee for precision. They compare it to the alternative, the failure to file penalty. This is the IRS's hammer, swinging at 5% of the unpaid tax every single month, up to a 25% cap. If you miss the window by just 60 days in 2026, you are looking at a minimum penalty of $510 or 100% of the tax due, whichever is smaller. The rich use Form 4868 to dismantle this trap entirely. By utilizing IRS Direct Pay to submit a partial payment labeled for extension, they satisfy the requirement without ever touching a piece of paper. They lean heavily on the safe harbor rule. As long as those with a 2025 adjusted gross income over $150,000 pay 110% of their prior year's tax liability, the underpayment penalties vanish. But the true masterstroke of the 2026 playbook is audit mitigation. Filing in the April rush often leads to errors that require a Form 1040-X amendment. In the eyes of a tax professional, an amended return is a red flag that invites manual review. By waiting until the final October 15th deadline, these filers ensure that every corrected 1099 and delayed K1 from their private equity, they provide the IRS with a finished, bulletproof masterpiece rather than a rushed draft. It is a calculated move that exploits the bureaucracy's own rhythm, submitting complex data precisely when the agency's initial annual energy has begun to wane and audit quotas. We have arrived at the ultimate realization. The 6-month gap between April and October is not a period of laziness, but a sophisticated financial shield. This knowledge gap paradigm is what separates those who are ruled by their money from those who rule it. For the average person, April 15th is a day of dread, a deadline, but for the informed investor, Form 4868 is a gateway to equity. By simply moving that deadline to October 15th, you transition from a react. Consider the current landscape under IRS Commissioner Danny Werfel. With interest rates sitting at 7% for the first quarter of 2026, the cost of a mistake, especially a failure to file penalty of 5% per month, which can quickly climb to 25% of your total bill, is astronomical compared to the controlled, predictable nature of an extension. This strategy is not just about avoiding the 2026 minimum late filing penalty of $510. It is about having the structural clarity to navigate the complexities of the One Big Beautiful Bill Act passed in July 2025. This legislation fundamentally shifted the math on state and local tax deductions. If you rushed your filing in April, you likely left significant money on the table or ignored the new SALT cap increases that could have saved you thousands. The wealthy understand that accuracy is the ultimate hedge against risk. They know that an amended return is a beacon for IRS scrutiny, while a single, perfectly executed October filing is a quiet, professional exit from the tax year. As Milton Friedman often suggested, the way we interact with government systems defines our personal economic liberty. By using the extension, you are not cheating the system. You are using the system's own architecture to ensure your financial integrity. The lesson here is simple. Time is the ultimate asset. In a world where the gap between the rich and the middle class is often defined by access to information, understanding Form 4868 is like finding a key to a door you didn't know was unlocked. Whether you are managing complex K1s or simply trying to ensure your retirement contributions to a SEP IRA are maximized before the October deadline, you are participating in a tradition of strategic delay that has served the world's most. Money talks, but it only speaks to those who have the patience to listen for the full story. Understanding these hidden mechanisms is how you stop being a passenger in your own financial life and start becoming the pilot. Money talks, but only if you understand the language. Subscribe for more stories behind the economy. Tell us